You know, when I first started hearing about crypto, I gotta be honest, I was a huge skeptic. I mean, all you'd hear about was the crazy noise, the get-rich-quick schemes, all the scams. It just felt impossible to figure out what was actually real.
And hey, if that's how you feel, you are definitely not alone. It's a totally justified way to feel. In fact, all that noise is exactly why it's so important to cut through it and really get a handle on the core idea here before you do anything else.
Because that really is the question at the heart of all this. See, this whole thing, it's not just about some new asset to speculate on. It's about a potential answer to a really fundamental problem, one that's been bubbling under the surface of our financial system for over 100 years. All right, so let's get right into it. To really get this, we have to go back and ask, why was something like Bitcoin even invented in the first place? And the story, it really starts with the slow, steady breakdown of the most important thing in any kind of money, and that's trust.
See, for most of human history, money was actually tied to something real, something tangible, like gold. But then, over the last century, governments started cutting that tie piece by piece. First, it was to pay for a war, then a president just declared it so. And what that led to was one crisis of confidence after another. Think subprime mortgages, and then, most recently, all that massive money printing.
And the consequence of that shift, well, it's pretty stark. When a government or a central bank can just print money out of thin air with no real limits, what happens to the money in your pocket, the money you worked hard for? It inevitably goes down in value over time. It just doesn't buy as much as it used to. That is the core problem with centralized money. So it's really no coincidence that right in the middle of that huge 2008 financial crash, this anonymous person, or maybe a group, we still don't know, known only as Satoshi Nakamoto, drops this white paper online. And it proposed this completely radical idea. What if we had a new kind of electronic cash that didn't need a bank or any government to work? Now, this stream wasn't totally new. You had thinkers like the economist F.A. Hayek talking about this decades earlier, this idea of money that the government couldn't mess with. The problem was always the how. I mean, how on earth do you build a system where you know a transaction is legit without having to trust some big bank or institution to tell you it is? Well, the big breakthrough really came from the ideas of this group called the cypherpunks. And these guys, they believe that cryptography, which is basically the science of secure communication, could be the key. That you could use it to build a whole new foundation for money based on these 4 core principles. Okay, so that's the dream, those are the principles. But how do you actually build it? The answer? The tech that makes this whole thing possible is the blockchain. Probably the easiest way to picture a blockchain is like a shared digital notebook. Imagine everyone on the network has an identical copy. Anyone can look at it and see what's written inside. But, and this is the crucial part, once something is written down, it can never be changed or deleted by anyone. That's what we mean when we say it's immutable. And this whole process is how it solves that trust problem we talked about. Instead of one single bank checking a transaction behind closed doors, you have thousands of different computers all over the world, all looking at it at the same time. They all have to agree to reach a consensus that, yep, this is a legit transaction. And only then does it get added to that shared notebook for good. And that right there, that is the fundamental difference. Think about it. A centralized system, like your bank, has one single point of failure, one single point of control. But a decentralized network, it's spread out, it's resilient, there's no one to shut it down. So for the first time, really, trust isn't being placed in a company or a government, it's being placed in pure math and code that anyone can check. So Bitcoin was definitely the Big Bang, the original revolution. But that one idea just blew the doors wide open to a whole universe of thousands of different crypto assets. So let's take a quick look at the map of this new universe, shall we? Okay, so the landscape is pretty much dominated by the 2 big ones, Bitcoin and Ethereum. Then you've got this huge category of thousands of other projects, which we just call altcoins, alternative coins. And then there's this really interesting category called stablecoins. And their whole job is just to stay stable, usually by being pegged 1-to-1 with something like the US dollar. All right, so the simplest way to think about the 2 leaders, Bitcoin and Ethereum, is like this. If Bitcoin's goal is to be the best money, like digital gold, a super secure way to store value, then Ethereum's goal is totally different. It's trying to be a world computer. It's a platform where you can build and run applications, called dApps, that nobody controls. Now, How do these networks stay secure and agree on what's true? They use something called a consensus mechanism. The two main flavors are proof of work, which is what Bitcoin uses. That's where miners use a ton of computing power to solve complex puzzles. The other one is proof of stake. Here, validators lock up their own crypto as collateral. They have skin in the game to verify transactions. And yeah, it's a way more energy efficient way of doing things. Okay, so with all this new tech, there's obviously incredible opportunity. But, and this is a big but, there is also very real risk. So let's be super clear about what you absolutely need to know before you even think about investing in this space. And look, these risks aren't just some fine print on a website. They're real. The price swings, the volatility are absolutely wild. The space is still like the Wild West, full of scams and hacks. Governments around the world are still trying to figure out the rules. And you have to remember this. For every one project that makes it, there are literally thousands of dead coins, projects that went to zero and took people's money right along with them. It really brings to mind that timeless advice from Warren Buffett: invest only in what you know. And that has never, ever been more true than it is right here. Seriously, before you put 1 cent into crypto, the very first and best investment you can possibly make is in your own education. Now, if you do decide to get involved, there are a couple of simple strategies that can help you handle that crazy volatility. The first one is called HODL. It's a funny term that came from a typo, but it just means hold on for dear life. You buy with a long-term belief and just ignore all the short-term noise. The other one is dollar cost averaging, or DCA. This is where you just invest a set amount of money, say $50 every week or every month, no matter what the price is. It helps average out your cost and takes the emotion out of trying to time the market. So when you boil it all down, this technology really forces us to ask a huge question. For centuries, our whole world has run on trusting people and institutions. This new world offers something different. It asks you to trust math and code instead. The question isn't just about money or where you invest. It's about what you fundamentally believe in and what kind of future you want to build.